First, we heard it was a crypto winter, and now is it a crypto Armageddon? But the fact remains that money is being lost in the crypto market. In the latest situation, 181,830 traders have liquidated their crypto assets, totaling $358.54 million worth of liquidations. We also have Okex, formerly Okex, recording the largest single liquidation order worth $1.9 million. The markets is rolling now, with Bitcoin losing $800 within minutes. According to data from CoinGlass, there is a growing short interest in FTT, with open interest rising 8% in the last hours to a total of $215 million. Now, what does this all mean? Olumide Adesina, financial market analyst at Quantum Economics, is here to make sense of it all. Olumide, welcome to Business Edge again. I get straight to it. What's causing these investors to pull out of the market? Over 180,000 investors liquidating their crypto assets, I beg your pardon. What's going on?
Yeah, before the cascade of sellers, we saw the crypto market, particularly Bitcoin, breaking above critical support level of 20,000. And that's because we saw risk-on sentiment coming in play that at some point, U.S. inflation was moderating. While that was going on, a report came from Coindex that showed an affiliate of FTX that happens to be a top crypto exchange have some systemic exposure in certain assets. And, before we head in Alameda, Binance, the CEO, particularly his name is CZ, said that they were going to liquidate about $500 million worth of FTT. Now, if you understand what Binance play in the crypto ecosystem, they have over 120 million users. That's twice the population of South Africa, and also the fact that they control most of liquidity in the ecosystem. That created some form of market contagion. So we saw sell-offs, and particularly FTT Solana recording losses of more than 15% for the day. But interestingly, it seems like the danger seems to be averted in the short term, because we're seeing some price discovery where Bitcoin is oscillating towards the $20,000 mark, and we see some other coins moderating their losses. But the fear is still there. The Bitcoin fear index, the crypto market fear index is still showing 31/100. That tells you that investors are still jittery. And with the impending U.S. inflation data coming on Thursday, smart investors are staying on the sidelines.
Yes, and you've taken us to inflation. So we've seen that there has been an inflationary battle that's being waged by the U.S. Federal Reserve, and it said it's going to stay on that road for the longest time. But we've seen it's also had an impact on the cryptoverse, on the crypto markets before now. When we look at the data that's possibly coming out on Thursday, what do you think it's going to tell us? And what do you think the reaction is going to be from the crypto markets?
Yeah, I expect that with oil prices moderating in the last 30 days, and the fact that we are seeing lesser geopolitical uncertainty, we are seeing reports that the US and the Russian administration are opening to talks, and that has somehow reduced the escalation we are seeing across different markets, and also the fact that at some point the US Fed might have to tamper down on interest rate hike. A moderation on the US inflation data will definitely give crypto bulls so much room because it means that the Fed will see that their interest rate hikes are working, and they might not necessarily look at increasing by some 5 basis points, as we've seen in the last 2 meetings they've had. But one of the things we also need to understand is that we are entering into the quarter of also sensitivity in U.S. markets. As of today, U.S. mid-election is about to take place, where we will know which party will control the Congress.
Yeah.
I think a Republican win might really be positive for the crypto market, because the Republican Party is often known for less market interference and less aura for regulation. But the Democrats retaining definitely might create some jitters in many quarters, and we might see more sell-offs. but it's really hard to tell right now.
Yeah, it's in the early stages. Early voting is on, but we'll get more details later on. Two very quick questions before I let you go, Olumide. Now, according to Nansen data, the FTX exchange has seen a significant exodus of stable coins, with some $451 million leaving its main platform in the last week and $15 million leaving its U.S. subsidiary. What is this telling us?
Yeah, it's telling you that the market contagion is definitely on the high. Investors are worried that this might be another lunar crisis. But interestingly, one needs to understand that FTX is better capitalized. If you look at their balance sheets, in fact, they're really going for, latest reports suggest that they're going for latest round worth $32 billion, and that's really massive. And the fact that in the span of 3 years, they've emerged as one of the top crypto exchanges, tells you that the firm seems ground rooted. But in this market, the fact that the crypto market is very transparent, you can look at transactions through chain analysis, and the fact that the transactions cannot be eaten, market contagion can really be misinterpreted, and that's what we're really seeing right now. But I think it's likely for them to stay off the steam in the long run because of, like I mentioned, they've had numerous licenses and partnership with systemic entities around the world. But this will definitely hurt them, and you can definitely see that a lot of funds are moved away from FTX to other exchanges, particularly Binance.
All right. So finally, very quickly, Olumide, tell me, is what is happening, some of these movements and the investors liquidating, is it reflective of where crypto stands overall globally, or is it more about what's happening with the U.S. crypto market?
Yeah, the liquidation really occurs when usually occur in the derivatives market or the underlying asset markets, where a bet is usually taken with high leverage the direction. So any misinterpretation definitely might magnify your losses, and any correct interpretation will definitely magnify your gains, and that's what happens in the liquidation. But I think in the long run, that's why we are seeing crypto regulation coming in play. The market seems to be aggressively manipulated because you can see that there's no referee to really guide on the rules here, and that's why oftentimes investors get highly liquidated, and the leverage exposed to for retail investors. A lot of countries have argued that it's not suitable. These are leverages that you don't see in traditional markets like the futures markets or the options market in the United States. So I think all these things will change when regulation comes in play.
All right. So Olumide Adesina, we'll leave it at that. Thank you so much for joining me on Business Edge.
Thank you.
Okay, so 180,000 plus investors liquidating their crypto assets. Bitcoin finding its place just under 20,000 again. Just some movements that are quite interesting for the crypto watchers there that we're bringing to you right here on Business Edge.